Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Well, this was one of those weeks where we hit every single one of the targets that was set from last week. And if you've been following along, you'll know that I leave my forecast lines on the chart from week to week to see how that worked out. And you can see that we started with a forecast to the downside, and a while back I stated that we had that open gap that would most likely fill, and now that it has filled, look what happened. We have a bounce. That's usually what you see 80% of the time. When a gap fills, you see the reversal. And now that we've hit this target, we actually hit that early on in the week. If I erase all these lines to draw the new targets, I'll label off the signals as we see them. This candle right here is known as a hanging man. That is a bearish candle. It's the second most bearish candle, actually. And with that, we have a gap below the market here, and we have a slight gap below the market there. So what does that mean for next week? Well, it means next week there's a greater chance that we will go down to fill at least this first gap. So that's where I'm putting my target right there, being conservative on that pullback. So for the diamonds, I'm putting a downside price target of 354.37. That's for the diamonds. Now, if we go to the Russell 2000, to the IWM, which is the Russell 2000 ETF, you'll see once again my lines were drawn last week. Target was hit right here, and then we started to pull back. If you recall from last week's report, I said I wasn't quite sure whether or not we would fill that gap, hence the reason why I stopped my target line right there. And so with that said, notice what's happening. We have the CCI and the stochastics down here are hinging lower, and we failed to stay above the zero line on the CCI, which is the momentum line. So we're turning back from that. And that, of course, is bearish. So for next week, what I'm going to do is just forecast that right down there. There's a good chance we could come all the way back down to test this support level. So this is more than a week out, but I'm still putting that price target on IWM to the downside, 214.79. So if you are long the small cap stocks, I would be sure to keep your stops in place, trail them up. If you have any profits, protect them, because we failed to get back up over this moving average up here, and now there's a role reversal going on. Remember, back here, this was a support level for the moving average. Now that it's broken here, the moving average turns into resistance, and I continue to talk about that role reversal because it's just that important. All right, so that's the IWM forecast to the downside. Now, for the Qs, another interesting thing happened. Not only did we hit the target, but I did a two-parter on this one. I said we would go up to test resistance at 394.91. If you look down at that data box there, you'll see the price from last week. And then I said we'll have to test to see whether or not the moving average holds as resistance. And therefore, this is in the process of pulling back. If I zoom in a little bit more, even though the Qs were up today, we had a lower high and a lower low. So that's a defined pivot point to the downside. And with that, you can see that there's a wide divergence between the K and the D on the stochastics. And we are not going higher. In fact, even though the Qs went higher, like I said, the stochastics is starting to hinge lower. So I'm going to keep my downside target plus. What does that mean? Well, I'm going to draw this down a little bit more because there's a gap that still needs to be filled down here on the Qs. So I'm going to keep that just like that. I could erase these targets because they were already hit, of course, and then we'll have to see what happens. In fact, I think the Qs could start off the week next week with some negative pressure. Again, we'll have to see how that works out. Now let's hop right to the spiders. That's ticker symbol SPY. It's the S&P 500 ETF. Again, we hit the upside target precisely. This horizontal line was what the moving average looked like last week. We're now above that moving average. Now that these targets are hit, again, let's go through our trading checklist. We have another hanging man candle, again, bearish candle, we have a wide divergence between the K and the D on that stochastics, and we have a resistance level right here at the top. So we're bumping our heads against resistance with that hanging man. So with that, I'm going to continue with my forecast lower. I'm not going to get crazy on this one, but I think we could easily pull back to this moving average, which is 464.38 for SPY. Now, I'm going to go out on a limb once again, like I've done many times in the past, and I'm going to give you a guarantee on the VIX. If you recall, back here and even here, I gave a guarantee, and I even staked my reputation on that those gaps would fill. Now, last week, I said we would most likely drop in the VIX. We did that. We far surpassed my target here, which is my forecast line from last week. And in the process, what happened is we filled this gap, which again, for the VIX, 100% of the gaps on the VIX fill. Now, I can't give you the date at which that will happen, but I'm giving you another guarantee, and that being that the upper gap right here will fill. That's my guarantee. 100% chance that that gap will fill. Now that my targets have been hit, let's draw those lines out so we can have a good record of that. In the beginning of the week, we might see a little bit of a drop in the VIX because of this red candle here, and the momentum is still going lower. But look at this wide divergence on that stochastic. So I'm putting my target. I'm going to go out a couple of weeks here. Put in my gap fill target right there on the VIX. Again, giving you the guarantee that that will fill. And then I'm going to back out and show you something that's very interesting. I mentioned this on a couple of coaching calls this week to some clients we speak with. And if you look at where the stochastics is right there on the VIX, we're currently at 6.465. There were only 6 other times when the stochastics got that low. Only 6 other times during the course of the year when we got that low. And if you look straight up from that stochastic reading, you'll notice that every single time when the stochastics got that low, we rallied. Every single time. Now, again, I do believe the gap is going to fill on the upside, but this little bit of data right here in that stochastic is giving us a super high probability that the VIX is going to start to go up, which means that is bearish for the S&P. Now, in addition to that, look at the wide divergence between the K and the D. That is the widest price divergence that we've had all year on the stochastic. So that, again, gives a higher probability to the upside for the VIX. So my upside price target, again, for those that are tracking the numbers exactly, that's going to be a price target of 2604 for the VIX. And that brings us to Ethereum, which is ETHE. Last week I said that we would most likely drop to test this role reversal line right here. That's exactly what happened. And I'm going to leave this in place because I said that we'll probably go down to test this support level, which was former resistance, and then bounce. We have not yet seen the bounce, but I'm going to make a forecast that we will most likely bounce and go right back up to this moving average right here, with my target for Ethereum going to be 4105. So that's it for this week. We've gone through the diamonds, IWM, the Qs, the VIX, the spiders, and Ethereum. Hope you're enjoying these reports. I certainly look forward to doing them each and every week. I hope it adds value for you. Again, keep your stops in place. Use the 1% rule for managing risk, and we'll talk to you next week. So long.